Good morning. This is Vince Lanci with the Gold Fix at 8 a.m. Um, thank you for joining us. Why don't we get right down to it and start with where the markets are? Okay, and where they were yesterday. Gold opened stronger on the back of London and Asian buying. If you remember, we discussed that in yesterday's call. The market has become to have a proclivity for moving between 12 and 4 in the morning when there is order flow. And that happened yesterday. And we also um, suggested that you would consider taking profits and or getting short if you're a day trader between 1240 and 1244, although we had no specific exact levels. The market did turn between 1240 and 1244 and left a nice long wick up top uh, with selling lower today. But the finish of yesterday's recap. Shorts continue to cover, but we saw some fresh long buying that we'd like to add to the group. It might be short-term momentum funds. I don't think maybe some macro funds are getting long. I think I'm starting to believe that yesterday's London buying in the morning between 12 and 4 might have been the end of that order. The way it hit the market, and the way it did not stabilize as it had been doing, meaning buying during London hours, Asian and London hours, and then sideways to slightly lower, creating daily intraday bull flags. But yesterday didn't give back all its gains, but it was a steeper sell off than normal. We'll see that in a second. All right. Yesterday was in the stock market an epic intraday comeback for U.S. stocks, but it fell short. Crude prices continue to crumble. Nice alliteration there. That's a Bloomberg paragraph. And hopes for peace in the U.S.-China war fade, even with Presidents Trump and, not sure how to pronounce it, Z, set to meet. Okay, this morning, back to original content. The U.S. dollar is firmer against the major currencies and most emerging market currencies. All right, U.S. stocks are Asian stocks globally are slightly lower. That's on the back of a lot of disappointing what they call flash PMI numbers out of Europe, and some flash PMI numbers out of Asia, amongst other contributing reasons or chronic issues that have not gone away. Italy, Brexit continues to weigh on that. The euro is hurt because of that. That's bullish for the dollar. China fixed the yuan at an even weaker level this morning. That's like the fifth day in a row they've done that. So that is another currency that's weaker against the dollar this morning. I haven't looked at the yen yet. I intend to do that now. But why don't we go before we go in? So before we look at charts, which we will, to recap yesterday's activity and signals that are coming up on my system today. Let's look at tradable levels for technicians and people that are actively trading, looking for swings intraday. All right. Courtesy of Michael Moore, get long above 1243, 1244.70. Basically, that's a continuation of what I had said yesterday. Between 1240 and 1244, I think that's a congestion area or a level where you'll see profits taking and or selling come in. So he's implying get long above that. Well, if we break above here, and then he says, or even just above 1243 and back below, look for profit taking. That's a traditional way of saying if we make new highs from yesterday and fail, I wouldn't buy the dip. Again, next level above that, 1254. That's the upside. We should be looking at the downside because we are called lower now. Okay, I got a signal on the 60-minute that I cannot trade for gold, but we'll get to that in a second. All right, get short on a pullback after decent penetration below and above 1229.60. So he really has no active levels between 1229 and 1243. We had active levels on our system, and I would say that his levels would be acceleration points if our system levels turn out to be triggered. And why don't we go to that? We'll skip today's data and events. We'll just blow through that very quickly. today's PMI from market, I don't know if it's sponsored by market. I'm being a little facetious there, but the market PMI data for US is due at 9:45 today. Uh, if you're a gold trader and you're an FX trader, you are a Fed watcher by nature, even if it's just to listen to how a market reacts to what a Fed person says. So, St. Louis Fed President James Bullard, I consider him uh, a knowledgeable academic as opposed to just an academic. Atlanta Fed President Raphael Bostic, don't know him. Cleveland Fed President Loretta Mester and Fed Governor Leo Brainerd. Brainerd's old school. He's been around for a long time. All speak today, while the beige book is due at 2 p.m. Now, some things are not important for intraday traders. They're more macro, things like the beige book. But the markets, especially stocks, are increasingly moving or looking for excuses to move on macro, much more long term, or as Michael says, backwards looking, which is a correct phrase, um, type of indicator as an excuse to do something else. So today, on the volatility based system levels, we're going to get to the charts in a second. We have a bearish signal that just tripped on the 60-minute. Again, something I don't do, especially if the market's flat overnight in gold. Generally, I fade those. I don't play them yet. 240-minute or the 4-hour is neutral. The daily is bearish. The weekly is bullish, and the monthly is not applicable. Now, I'm giving you bearish, neutral, bearish, bullish. What I'm saying is these time frames are bearish as applied to your trading today. So the 60-minute is bearish today. The 240-minute is neutral right now today. The daily is bearish today. I'm not saying it's bearish for days. It's a daily chart. All the stuff is applied and filtered to an intraday active day trader situation. The weekly is bullish today, giving you indications that trends would continue. The daily saying the trend will continue lower. The 240-minute is neutral, and the 60-minute just triggered bearish. So why don't we go to the charts and take a look at that? First, let's start with gold. Let's focus right on gold. All right, we got a lot of little lines here I have not removed yet. I just got back in town. My apologies for what you're looking at in terms of watch where the circles are very relevant. If you remember the 4 circles that are showing on this screen, I'll tighten it up a little bit. I think there's 5 total. Yeah, the 5 circles on this screen are moments of where order flow comes in. We did not have that happen last night at on the 24th Eastern time between 12 and 4. You can see we traded sideways, and in this hour we got a signal to be short, and you would be short at the close with a stop at 12:32:20. Other things lined up before that. I did not sell it. The market seems to be saying I should have sold it, but actually, I think what would give that more credence. My policy is to not trade 60-minute signals in the first hour of the day. I'm not married to that policy, but looking back now, as we broke through this trend line I have drawn there, uh, maybe I should have traded it, but I did not. So we have to move on and look for the next trade. So will we have an opportunity should we be selling rallies? Should we be buying dips? Um, well, this implies you should sell rallies below 1232 on an hourly basis. Let's go to the 4-hour, which was neutral as I was putting together this report, which is now still well, I mean it's bearish, but it's not it's become it's nothing. It's still neutral. It's not saying anything. We could go as low as 1224 and the market won't care, or this won't give us any indication. But yes, you can see we're below that trend line, and it's starting to look like we have a top. The daily is where I think you start to see, although the daily is bearish from a system perspective, it also from my eyeball and optical technical analysis, it's bearish as well. From a flow point of view, I see yesterday's long wick above, and that's not necessarily a classic candlestick formation that's bearish, but that says to me, we had the buying in China, we had the buying in London, and we had the selling in the U.S. Right? This morning, we did not have the buying in China, we did not have the buying in London, and we have the selling in the U.S. so far. Question is, will we have the buying later on in the day in the U.S.? Well, on the daily chart, we are right below that trend line, which I have left up for some time, considering it important for reasons that should be self-evident now, but may not have been evident when I drew it. But there's a reason for it. I don't just draw these randomly. Um, okay, why is the daily bearish on the volatility-based system? Because when we got the buy signal here in this bar, which you could not participate in because risk reward wasn't there, um, uh, you get a negation of that in 1 to 5 days out. 3 to 5 is actually it. So even if it's doing well, you would be 1, 2, 3, 4, 5. You would be out. So basically, had you traded this, even though the risk reward wasn't there, you pretty much would have been flat 5 days later, 4 or 5 days later. Then you have a spike higher. I'm not a fan of that spike because it settles under back with inside the Bollinger Bands. So you have taken together, you have a system that gave you a buy, but not a good risk reward, so you didn't participate. And then it went sideways, and you've got 4 out of the last 7 days have had long wicks higher above, and I'd say 2 at most had long wicks lower. That, for me, is a simple use of candles to say that there's either selling, taking profits above, or trapped longs trying to get out from before. There is selling. If you remember, I said before, in other areas where you see long wicks, they serve as if they're above the market, they serve as resistance. And it doesn't mean that the market's going lower, but they serve as resistance. And if we get above them, you can assume that the market would repel that area strongly. So, which brings me to the bullish scenario. So this is bearish and can be bearish as low as 12.15, but it does not predict speed right now. It just says momentum higher is negated for the moment. All right. When we go to the weekly, and you get the bullish scenario. All right, we're back within. The weekly is narrowing, and we could get as high very reasonably and probably very orderly fashion between 1260. Well, let's put a number on it. 1260, 180 is the number as it comes in this week. That number will change as the week ends or progresses, which fits in, I think, if you want to paint a picture of the path forward. We can have we can continue to have a rally after pullbacks and get to that 1261 area, especially in light. It kind of fits in with other pieces of the puzzle that I'm looking at that are not system based. Like I know, as much as I can know, that there are stops above 1250 CTAs that will cover. I'm pretty sure there are commercials who will sell into that. Um, I would not be surprised, is the proper phrase. I would not be surprised if the market pulled back a couple days and then had one more spike higher, triggered some stops of CTA based order flow, and then make its top in the 1255 to 1265 area, and then go sideways and then make a decision of whether it's going to go higher or lower again from there. So, based on system trades today, we have a problem if you're an active trader because the hourly ship has sailed. Uh, do you want to trade this uh, uh, in a regression fashion? You want to fade the sale? Maybe not a bad idea to do. A bad idea to do. Uh, uh, but when you look at that technical line, in my mind, I'm not going to be a buyer of this until it gets above that line. And this line here, which happens to be my stop, so I would be a buyer above 1232.80. So I'm not really buying regression to the mean. I'm buying momentum reversal. Regression to the mean, something Larry is very good at, and something uh, that I am particularly fond of doing on more longer term bases. harder for me to do on very short-term active trading. Um, would be, say, if you were looking at this chart here and this candle left a long wick below, and you were inclined to be bullish already. Well, if this hour closes with a long wick below, you might want to be long. You might consider being long with a stop at a level that is either technically sound, maybe the bottom of the candle, or financially sound, the amount of money you're willing to risk. Ideally, you want the technical number to match your financial number. What does that mean? I think that's an important concept for beginning, intermediate, and expert traders. Expert may know it, but all expert traders like to hear it repeated once in a while to remind themselves of their own discipline. And that is this: if you see a technical number and you are bullish today, you are looking for an excuse to buy, and this candle closes the way it is right now. Let's say this candle closes right here. You could very easily say that's a good level to get long, and the low of this hourly candle is 1228.30. All right. You want to play regression to the mean? This is where money management matters. I'm going to get long. I'm going to play this role. I am bullish if the hour were to close right here. I will get long, and the stop is 1228.30, which is very tight. But we're talking about, you know, a market that may have had its move already. And I generally trade with tighter stops and like to re-enter. But just humor me here. The market is right here. I'm going to get long right here with the market trading 1229.80 with a stop at 1228.20, which it would be a new low for the hour or in the next hour. So I'm risking, let's just say $1.50, call it $2. Let's say I get in at 1230, right? So let's say I'm risking $2. That's the technical level that tells me I should risk to. Fine. What's the financial level? How much money am I willing to risk in this trade today, right now? Well, look at the amount of money you have under management, whether it be your own or someone else's, and ask yourself, what percentage, what are my rules? How much can I lose in one day? What am I willing to risk in one trade? What are my other positions and capital that they're tying up? Let's assume you have no other positions on. This is the only thing you're looking at as your first trade today. My rule is I won't risk more than, well, it depends on the market, but I'm going to make a rule up. This is not my rule, but my rule is I won't risk more than 1% on any particular. I won't risk more than 1% of capital under management on any particular trade, on any individual trade, or on any individual day. But let's just say it's on any individual trade. All right. So now I have $2. Take $2. How many contracts can you buy um, based on that $2 stop, so that if you get stopped out, you don't lose more than 1%. And that number would be whatever it is, depending on what you have under management. Let's say it's 10 contracts. Right? So then you say to yourself, are there any other trades on my radar, whether it be technical, system, or gut feel, that I want to reserve? How many trades do I want to be able to do today if I'm wrong? How many times do I permit myself to be wrong today? And if that answer is 2, then I'm going to risk 0.5% of what I can lose in one day. So I'll take that 10 and cut it down to 5, because I want to have the ability to trade again. If I have personally, now speaking from personal experience, directional trading for me, 2 losing trades in a day, and I shut down. I shut down because, or I take a break. I walk away from the desk. 2 losing trades in a row, I should say. 2 losing trades in a row. If I'm actively trading and I have a lot of signals going off, I take a break and walk away from this. That is self-discipline to manage my own expectations and to make sure that I don't try and overtrade to make up for it. 2 winning trades in a row, I walk away from the desk for 15 minutes just so I don't get manic and start over trading. So these are ways that you self-discipline, control, know your weaknesses, know your strengths, and manage them that way. So it's not a bad idea, if you want to play this, to be long right here with the stop on new lows on the hourly. I personally don't want to play it that way, but if this market, as this upticking, right? If this market, this has got Larry written all over it. and that's not a pressure statement, but this is the kind of thing I think he would see, um, and say, yeah, if I had to do something, I think a person who trades regression to the mean would say, if I had to do something, I'd be either a buyer here with a stop at new lows, or a buyer if it gets back into that previous hour candle. Which brings us to, since we're going to be ending this shortly, good idea to go to the 30-minute. The 30-minute says the 30-minute closes in 9 minutes. If the 30-minute closes like this, uh, it would say nothing, but it would imply that you've got a very good chance of what I think classic candle technicians call a morning star. If the next candle comes in green, we could rally the rest of the day. That said, as a combination regression to the mean and momentum trader, if the candle settled here, I would probably be a buyer in the next half hour if it got into the body of the candle that I'm lined up on right now. So basically above 1230.70 in the next half hour, I should say. We're on the 30-minute chart. I'd be a buyer. It's 8:21 now. I'm going to cut it short. Give you some tradable levels. Back to the hourly. I think two ideas for you today to consider are long with a stop at on new lows, buy strength above 1231, 1232, or 1233, sell strength below 1232 and a half, which comes in where that trend line is. And I'm not a fan of selling weakness because the ship has already sailed. That would be, I would call that the high risk, high reward trade. The buying the reversal here would be the low risk, low reward trade, and the buying strength in the next half hour or next hour would be, I would call the high risk, medium reward trade, because you could just get chopped up. So there you have it. Have a great day. So your levels are, my levels are that I'm watching going into the day are potential trades would be new lows in these futures. That would be 1228.20. See how, if the 4 hour gives me something on that. If we go back above this trend line, which comes in at about 1232, 1232 and a half, see how it behaves in that area. And on the hourly volatility system, if we get about 1232.80, most definitely considering getting long. Those are my levels today. Gold ship may have sailed. I do want to add one more thing. Platinum, which has been a leader in the precious metals markets higher, even when silver lagged and behaved more like copper, may be a little bit toppy. And I want to throw this at you people because I think it's important as an indicator. And there you go. Platinum is, I think, the best way to look at platinum, since we're not day trading this, because it is a relatively illiquid market. Okay, so if gold made a high yesterday, platinum surely may have made the kind of high that makes you want to be scared. I'm not saying it can't go higher, but platinum looks like a good short here on a day-to-day basis, like a day 1 to 3-5. If it gets back into the Bollinger Bands, you could see some serious acceleration down to 1040. As long as platinum is negative, I'm not uncomfortable being short gold. So there you have it. Have a great day. Stay with us in 5 minutes. Larry Benedict will be here with the AM Roadmap, and I will be happily joining him. Cheers.